Yo, what's up, everybody? Hey, so today we want to do a quick market breakdown on AUDUSD. AUDUSD is one of those pairs as considered a kind of slow moving pair. It kind of gives you a lot of time to kind of analyze the market, for which it doesn't, react to a lot of noise that goes on in the market from other pairs or other countries or whatnot, whether it pertains to like fundamentals, like such as news or things like that. Now, so what I want to do is kind of start out with this pair. I may go into other pairs, I may not, but I do want to focus on this one real quick to kind of give you just a market breakdown on what I see in the market for it. Okay, so we're going to start out with the daily time frame. Now, when I first set everything up for me, when I look at market structure, I do jump to the weekly time frame. As you can see with the weekly, I do have it marked off with these white lines right here. I have a resistance here, a little bit of resistance right here. Because if we actually jump over to the weekly time frame, you can see focusing in on these white lines right here. This one was initially here. As you can see, it wicked up above. But as I go along throughout my my breakdown, you'll see why I kind of move them around a little bit and just readjust them, just to kind of get a nice little fine-tuned outlook on the market. So I'm gonna go over to the well, before that, yeah, you see, like I said, the resistance here, and then you also have some resistance here from this zone. Also, there was a support turn resistance in this area right here. Now, I've recently moved this one, this weekly support area, from here, which will basically give this resistance for this area right here. I'm gonna zoom in a little bit for what we're actually trading right now. And I moved it over here just to kind of get a nice little fine tune of what I'm seeing in the present. Now, you kind of see that market breakdown as far as with the weekly time frame. If I wanted to, I can draw a nice little path here and go from here to here to here. And notice how it's constantly making those lows in hopes of price continuing to the downside, right? So we can leave that right there so you can just kind of get an idea. And what I'll do is I'll change that to this grayish color so you'll know that it belongs to the weekly. Now, once we flip over here to the daily time frame and we know that we're in much of a downtrend, we go to present time. Now, the last few weeks, since July the 13th, we've been in the uptrend, and price has pushed to the upside with more or less of a pullback based off of the weekly. So the daily kind of created some structure to the upside, in which we was buying it up until we got to that 618 area, and then we got this huge engulfing candle to the downside. So if we wanted to, we can definitely break down this daily time frame as well, so you can kind of get an idea of what we're looking at. Notice that we do have a resistance area right here. So once price got above this area, that's when we started looking for those particular buys. Now, for me, the weekly and the daily time frame is they're very strong time frames, because they're much higher time frames. So even with us running into this weekly resistance area based on this line right here, we still want to maintain that daily structure and allow that daily structure to play out like it's supposed to in most cases. So once price broke this area right here, we would draw from here to here to here. You'll see how it continues to just create those highs in the market all the way until we get up to right here, and then now we're basically retesting these lows right here. Now what I'm gonna do is I'm gonna change this to a red color so we can follow along. You'll kind of see what I got going on. Okay, so we had the initial push from the weekly time frame all the way down. Once price pushed up and we broke this last high right here, this last lower high, broke that, then now we started making lower lows, higher lows, and that's when we got that pullback, even though it was a uptrend. Now once we established that, and then once price started to test on the daily lows, we want to start looking at opportunities to get into the market from the 4-hour time frame. So for me, the 4-hour time frame is probably one of the best time frames, because that's where, at least for me and at least for this pair right here, where the trend starts. Okay, so we switch over to the 4-hour time frame, you'll still see that structure as far as the weekly and the daily, right? But it kind of looks a little crazy based on the 4-hour. Now we all understand, and I hope everyone understands this, that whenever you're dealing with lower time frames, the higher time frame sets the precedent. Like, you always want to keep that in the back of your mind. Like, hey, I'm trading from the higher time frame. I enter off of the lower time frame, and I want to fine tune it every time I go to a lower time frame. So for me, once I understand where I am in the market based on the weekly and the daily, I can then jump to the 4-hour and find that structure and understand where I am if price is beginning to turn and go in another direction. Because I want to try to catch price going in another direction, but I want to catch it at the very beginning. That way I can turn an intraday trade into maybe a swing trade, or a scalp into an intraday trade. You know what I mean? So kind of keep that in mind. So for me right now, looking at the yellow lines right now, because that's how I kind of color code everything. We go from this daily high right here to this daily low. As you can see those horizontal lines, and you can see the names of them over here. So we have the weekly resistance, we have the daily high, the daily low. Price came down, broke that daily low. Now it's pushing back up. But while it's pushing back up, we also have created structure based on the 4-hour time frame, which is the yellow line. So, and forgive me if I'm jumping all over the place, but I'm pretty sure you guys follow me, or hope you guys follow me. So now we have this 4-hour high, or this 4-hour resistance area, because this was that support area turned resistance. Price broke, pushed back up, tapped this yellow line, and pushed back down to a lower point on the chart. So now I'm banking on price doing this right here. So we're going to create some more structure for you guys. So now we have a push down from that daily high, push below that 4-hour support. It tapped this daily low, it pushed back up, then it pushed back down, broke the daily low, maintained structure based on the 4-hour time frame, and now it's pushing back up towards the 4-hour high. So now let's kind of put that into perspective. So we're going to color code that one yellow. So as you can see, right, if we just take these off and we get a little bit more clarity, right, what we can do is, maybe I can just hide it. We can just hide it. Maybe bring it back a little later, like that. Okay. Now you can see what the 4-hour is doing. So you still have that daily high, you still have that daily low. It should be support area. Now price is back above that daily low. So we want to be careful when we're trading this particular setup, because price, once it gets back into that zone, it has a tendency to want to kind of push back up and now maintain price within this zone right here. Okay. But if you understand trading, it's all about probability. It's all about risk versus reward. and that's what you want to capitalize on. For example, let's say the other day I took a trade off of this 4-hour high. So I knew that this was the 4-hour structure that I was waiting on price to break. Once it broke below it, formed a few candles below, and then retraced, I took a sell right here, and I got out at the -27, because if I pull out the fields, I'm pretty sure it's a -27. If not, I want to say I did it going into some type of structure over here. Can't remember exactly. But now that we're in a situation where price pushed down and then pulled back up again, I was looking to sell around this area right here, because that was the -618 based on the fibs. So if I pull out the fibs for this side or for this trade, as you can see, hit the 50%, it hit the 618 fib, and I'm looking for price to continue down to the -27, right? So I'm kind of, basing it off probability. I'm basing my trade off of, the best risk reward that I can get based on the higher time frame. And then as we go further down, because we're going to keep this in mind, the 4-hour structure, and we're going to go over to the 2-hour. And as you can see, the 2-hour, it gets a little bit more scarier, because now we're looking at where price, when I got in, we've seen these wick rejections right here, and it looks as if price wanted to just drop from there. However, price pushed up above, broke this little area right here, closed, and then price pushed down. But then we had a bullish engulfing candle. Now, with me trading for the amount of time that I've been trading, I kind of understand that the higher time frames matter the most. Again, the weekly, the daily, the 4-hour. So whenever you start trading, the 2-hour, the 1-hour, 30, the 15-minute, I don't look at engulfing candles the same. You know what I mean? And the reason being is because a lot of times the market can try to trick you into thinking that it wants to go in the opposite direction that it should be going. And you'll end up following certain candlestick patterns, such as an engulfing candle. Now, granted, price is back above this daily low or this daily support, right? And it can continue to the upside, but I do want to keep the 4-hour time frame in mind. And as of right now, we are in a downtrend on the 4-hour time frame. Okay. Now let's just say this, and you always want to have an extra exit strategy. You always want to look at the market or price 2 different or 3 different ways. For me, I want to make sure, or I want to try to at least see if the price can continue to go to the downside. However, I do have an exit plan, and I do have a strategy where if price don't go in my direction and it gets back above of my stop, then I know that price want to continue a little bit higher, and maybe it can, fall to the downside a little later. So this 4-hour high, if price breaks this area and closes multiple candles, then I can wait for the pullback, and then of course I can take it to the upside. But right now, 4-hour time frame, this is a scary candle right here, but we're not going to allow it to shake us out, and we're just going to wait it out. Maybe we can get price to play around in this area right here and then continue to fall to the downside. We're going to go to the 1-hour time frame, kind of see what it looks like. This kind of helps us out a little bit because we had a nice candle push to the downside. Then this candle right here was basically that 2-hour candle, that 2-hour engulfing candle. Price right here is meeting this resistance area on the 1-hour time frame. So hopefully price can hold right here. I know we're wicking up above it right now, but if it can get back below that 69.41 area in the next 42 minutes, then we should be in good shape. If not, we still have a 1 to 3 risk reward. My stop is at a 3. It's at the 78 points, what a 78.6 level right now. I could adjust it because I still be safe. I still be pushing a nice 2 1 to 2 risk reward, but you know, I have no problem with losing that trade once we got this nice trade over here from the other day. Going to the 30-minute, you can see the same thing. Had some resistance right here, and then you know, we waiting on to see what this candle is going to do. Now, as you can see, as you follow along, like you see this push from for the 4-hour time frame, push back up, found resistance, push down a little further. Now it's going back up to retest those highs. But you notice that the smaller time frame, such as the 30-minute, because I know a lot of people who trade the 30-minute time frame, and they tend to look at the market in a way where they can scalp it off. So say, for example, if we trade like they trade, first let's take this the fibs off. All right, and let's do this number here. So this would be more or less situation where we'll delete all this. I can always bring it back up. I'll take this off as well. So this line right here is going to represent that 30-minute support for some traders who trade that way. And it's going to be green, okay? Some traders will look at it, well, okay, cool. Price broke below, created the 4-hour support, created the 4-hour resistance area, right? Pushes up 30-minute time frame. It broke above this area right here and right here, found support. If price comes down and it breaks this area, most traders who trade like this, 9 times out of 10, they're going to end up selling it once this candle closes, right? And as you can see, the next candle pushes up above and it goes and it takes out. And I'm pretty sure most traders, they're going to have their stop right above here. You know what I mean? So then they find themselves doing this number right here. All right, cool. We're going to create this area. Price going to come down and maybe we can buy it up. And then next thing you know, push up above. They enter on this candle or this candle, pull out their fibs, and then they think price is going to go up. And next thing you know, price drops below, comes back, retests this area right here, which that support turned resistance, and now it pushes to the downside. Now they're confused. Then next thing you know, price pushes down again, they take a sell, and then price reverses on them, and then it goes in the opposite direction. So what I'm trying to get at is, a lot of times the smaller time frames don't matter in the big scheme of things. What it does is it just gives you time to kind of see the market and see where there's exhaustion. For example, over here in this area, when I told you that I entered the market, so price broke below this 4-hour support, or you see the H4 high right here now. But when price broke it and it pulled back to this area, I seen these exhaustion candles on the 30-minute time frame. And that signified to me, hey, price is in my zone. It's now rejecting this area. Let me sell it. You know what I mean? So I built that confluence and I sold off. I didn't look at this area right here where price broke above this 30-minute time frame, then enter on this candle right here, put my stop right here, and then think that price is going to continue to the upside. You know what I mean? So in the big scheme of things, we want to wait for those higher time frames to form, and then we want to enter on a smaller time frame. Because even if we go smaller, say let's say 15-minute time frame, you can see. Now you got some guys that'll sit up here and they'll scalp. Let me see how many pips this is. They'll scalp off these 16 pips. Be break, retest, scalp off these 16 and call it a day. For me, I'm entering here and I want all of this. I want that 67. No, you're not going to get it every time. But you want to kind of set yourself up, because now you can get those bigger trades. They can run a little bit longer. You don't have to sit in front of the computer all day. You can have a nice 12 to 15 pip, stop loss, gain you 66 pips. That's going to be, let me see, short. If we shorten it from here, you know what I mean? That's a nice 1 to 4 risk reward, almost a 1 to 5. So that's my mentality whenever I'm looking at the charts and I break them down, you know, the way I break them down. And a lot of traders, they do the same thing. They break them down quite similar to how I break them down. And you just always want to keep that in mind. So that's it in a nutshell for me. I know I kind of went over on my time explaining what I see with AUDUSD. And again, this is a much slower pair. As of right now, price is just barely moving. It is 2:22 in the afternoon here on the East Coast. And but yeah, it gives us a lot of time to kind of think about what we want to do with this particular pair. And what I do is I just wait it out. Hopefully price can find this resistance area here, or maybe find it here, and then it can continue to go to the downside. All right, so that's it for me, guys. I appreciate you guys watching. You know, like the video if you can. If you don't like it, just give me some nice feedback in the comment section, or whatever. Let me know what you might want to see the next time. I do have quite a few pairs that I trade as far as Forex. I even trade some metals and some indices. I don't trade oil, but I like to watch it. I do dabble in crypto a little bit, not all these. In particular, I don't know why the SPY is right here. I think it's stuck. It should be like down here somewhere. But anyway, I do look at the SPY, and I kind of look at some of those common pairs in the stock market that tend to move and kind of you know, move the market a little bit. You know, whether it's tech or you know, e-com or something like that. So, but anyway, guys, I appreciate you watching. Again, give me a like on the video if you can. If you do want to see something else, just let me know, and I'll be more than happy. Thanks.